Hey guys, it's Simon with Trade and Perform Coaching. Wanted to do a quick trade review for the Tuesday, the 30th of May. So a couple of things before we get started. Let's do the legal disclaimer. Important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential risks, but also large potential rewards. You must be aware of the risks and be willing to accept them in order to invest in the futures and options market. Absolutely do not trade with money you can't afford to lose. The website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in this channel. Past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. Let's get this down. Hold on one second here. Sorry about that. So today we had a couple of things that were very interesting coming into the day that were helping us get a read. So context is everything in this market because it's so slow and grindy. I want to pull up the TPOs, effectively the same as a volume profile. And what you'll see is that, first of all, in NQ, we are still one-timing to the upside. What that means is we've simply been unable to trade below prior day's low, and it's been a bunch of days in a row. I want to show you that. Pull that in a little bit here. Let's see if we can pull that down. Well, you gotta love it when it won't cooperate with you. Okay, so when you look, we've had day 1, day 2, day 3, day 4, day 5, day 6, day 7, day 8. 8 days, today included. First of all, you'll notice that the range is getting narrower and narrower on top, right? And the second thing that you're going to notice is that when we don't have an ability to trade below prior day's low, it's hard to get a change in the context of the market. So with NQ being strong, it pushed right out of the gate to the upside, right? So ES, on the other hand, when we look at ES's chart, which I'm going to do right now. Wow, I'm sorry I'm doing this so late. My twins had me up late, and they still have me up late. So what you'll see here is that for the last couple of days, let's see if I can pull this in here real quick. And if I can pull this in, there we go. So what you'll see, we're going to throw the 29th out because the 29th, it recorded it as half a day, but really the markets were closed on Memorial Day. Right, so what you're going to see here is we've had 1, 2, 3, 4, 5, 6, 7, 8. This is the 7th day. This is the 8th day, and this is the first time we've traded below and traded below prior day's low. That's important, and let me show you why that's important. Whenever the market's moving higher in a one time frame fashion, like you see here, 1, 2, 3, 4, 5, 6. Notice on the 7th day we trade below. Okay, so when you're looking at this, I want to be clear on what I'm stating. Once we trade below, the nature of the market tends to change. And in this case, we went from a market that was driving up to a market that moved back into balance, right? A market that moves into balance tends to be easier to short on top and push back in. However, you still have to look for the signs and the setups that the market is either shortable or it's easier to go long. In general, in ES, unless you are on the cutting edge of aggressive, it is easier to wait for the long setups because obviously we're in the top third of the market and the market is tending to push up. So what I'm looking for when I'm going into trade every day is where are the traders making their mistakes, where are they pushing down, and where can I capture that opportunity. So that's where this occurred today. Again, the point of this is to keep this as brief. I'm going to try and make these as brief as possible so people can absorb them, capture them, and get the lesson. And if they want deeper lessons, they can obviously just come into the mentoring room where they can get a lot more in-depth explanation. So today, if you look, we had a couple of key areas here, and I want to go over. This was Globex high. This was Globex low. This was the open print that was untested from Thursday, meaning that was the opening tick of the market on Thursday. And usually, the open tick will get either tested from below or tested from above. But if it's not tested from one side or the other, the first time that it tends to get tested tends to be a responsive area, right? We had the opening print from today was a key area, and then we had the white zone. So everything was compressed, right, which makes things more difficult. You have to think in terms right now of 5 and 6 points, not 10 and 15 points, just because of the way ES is trading, right? So if you will look today, this zone was not here. I simply pointed this out. This was a structure that I was pointing out for the people in the room earlier today. But this this area was the white zone. Oh, excuse me. You know what? I wiped out the white zone. I stand corrected. It would have been 24.10 and a quarter to 24.12 and a quarter. So this was the white zone today. So the number one thing you'll see when we opened up is that this was the open print right here. Let me stretch this out. Tick opened at a relatively negative, big negative number for ES, particularly as of late, right? Most of the time we've been opening up positive. We opened up negative. So we opened up underneath the white zone, and you can see that we immediately pushed into the white zone and rejected out of the white zone. So that's key for me because that lets me know that that's actually a valid support resistance area, right? And the whole thing from 24.10 and a quarter to 24.12 and a quarter was support resistance, right? The next piece that went there was that we came in and we backside tested. If you'll look right where this went to, right? We opened right here. We tested up into 24.10, rejected, and then we came right to 24.0850, right to where that open print was. And I want to show you that so you can see on a 1 minute chart exactly how that worked. Okay, so here's the open. Let's congest this down, right? Because you can get perfection sometimes out of the market, but you have to actually be willing to see it, right? So if you look on a 1 minute chart, this was the opening print. So remember, this line wasn't there until after we opened, right? We push up. So this is right here. Why is that? There we go. We opened up. Right, so this is in a 1 minute series. We opened up, we pressed into the white zone, reject. We roll from 24.07 and a quarter, actually 24.0750, 24.1050. I apologize. Wow, I'm tired. 24.1050, and we roll right down to 24.0850, and you can see, right, that we tested that over 3 minutes. 1, 2, 3, never penetrating below that 24.0850. So that became an important number. That's why it was on the chart, right? We then rotate up. Remember, the tick is very negative, and shorting in the hole, except at the very bottom third of the range, is a really bad idea. You'll notice the market then turns around and starts to press back to the upside into the white zone, right? And I'm going to go back to the 5 minute chart now so everyone can keep up with the time frames here, right? And what you'll notice is it was very subtle, okay? As we're pressing up into the white zone, we finally press the back of the white zone. And notice the market was very mechanical and there was very little participation. Why was there very little participation and what told us that? First of all, we get back to the zero tick, which was right here. And notice we just miss closing the gap, right? Now remember, normally if this was an upside open and we miss filling the gap by a tick, that's normally considered very bullish. Missing filling the gap is generally considered relatively bearish. And so what does the market do? We roll all the way back over, and then we roll all the way back down. Remember, this 24.0850 has already been tested, and we come down and we fall 1 tick shy of Globex low at 24.0775. Again, this is a sign of a very mechanical market. But something very interesting happened here. If you'll look, as we pressed into a new low, we got clear 5 minute tick divergence right into the low, right? And then we got a clear rotation from 24.0850 all the way back up to eventually 24.14, and then you'll see that we proceeded to miss Globex high by 1 tick, right? And then once we got up to Globex high and we missed by 1 tick, right? We went through a very slow consolidation, and then eventually at the end of the day we ran out of steam. At the end of the day, this was just a perfect balance day. There was no information to be gleaned from the market as to who was in control and who wasn't in control. And guys, you'll have to forgive me. My wife has been sick, and I've been doing double duty with the twins, so the speech is a little tired. But the point behind this is that this area right in here, right, this first push down, the plan was to trade either the first test into this open print area, or grab the first 5-minute tick divergence into the low and push back up to the upside, right? And so that trade plan worked perfectly. Right now, did everyone execute it perfectly? That's always a different story, right? But as far as what the plan was for today, the plan was the open print, Globex low, and 5-minute tick divergence. That worked beautifully. So the rest of the day, if you caught this rollover here at the end of the day, more power to you. Also, the other thing I want to point out, it's really rare that we don't tag Globex high or low. So all in all, my suggestion would have been that if you could not have grabbed this trade early in the morning, which I had highlighted this early, 9:15, 9:30 area. If you were unable to grab this, I did not think the short was the best trade in the world today. I don't think shorts at the top fifth of the market are great trades. However, finding special setups, even when it's slow in summertime, and grabbing them and pushing them to the upside, very, very helpful. And a particular shout out to David, who did catch that long side trade off the tick divergence. That was a very, very nice trade. So, at any rate, that is my review of the day. There wasn't a lot to do. If you got overactive in this chop, right, it became very, very painful event, right? So my suggestion is during summertime, or when we're having these narrow ranges, look for the small clues that are tipping you off that you have an edge on entry, right? Be prepared to have a bit smaller ranges, but you could still pull your 2 points out of this range right here and have a very nice day. Where you get killed is if you try to overtrade it. Anyways, my name is Simon. I'm with Trade and Perform Coaching. My job is to take traders from being losing traders or mediocre traders and make them consistently profitable traders. If you'd like to try out our room for a couple of days for a 5-day trial, you can email me at tradeandperform@gmail.com. At any rate, or hit me on Twitter or StockTwits. I hope this helps some people out. This was the key of the day right here. There's nothing else to say. We're no longer one-timing to the upside. Look for a change in character in the market, and that's what I'll be looking for tomorrow, along with range expansion. Very important. Okay, guys, have a good night. I'll talk to y'all later.